Well, China is vowing to fight to the end against U.S. tariffs, setting the stage for a standoff between the world's top two economies. President Donald Trump said he would introduce an additional 50% duty on U.S. imports from China if Beijing imposes a 34% reciprocal tariff on American products this Thursday. So how will this showdown play out? James Mayger is a senior reporter for Bloomberg who's covering China's economy and government, and he joins us now from Beijing. James, good to have you with us on the program. Firstly, do you believe when it comes to 2 days' time on Thursday that China will impose that 34% reciprocal tariff on the U.S.?
I think they will. I mean, they showed last month that they would impose the first round of reciprocal tariffs that they had threatened against the first round of U.S. tariffs, and there's been no indication that they're going to back down now. So yeah, everything that they've said and everything they've done said in the past indicates that come Thursday those tariffs are going to come into effect.
Yes, and where would this hurt the U.S. the most, perhaps, when it comes to exports to China?
The biggest the biggest imports from the U.S. are in agricultural products. It's soybeans, it's pork, it's other kinds of grains, also airplanes, some semiconductors. So but it's the largest group is going to be agriculture. So it's going to be the Midwest farmers are going to be the groups that's going to be most affected by this.
Yeah, so then in that case, the confidence you have that this will happen. So I'm assuming that China is expecting this additional 50% duty from the Trump administration. Do you think they factored that into their economic thinking?
Yeah, this is a real surprise last night. I mean, I don't think even the Chinese administration thought that this, would be the retaliation would be so sudden and so immediate. But I think they've factored in that relations with the U.S. would continue to get worse, that there would be other actions by the U.S. government, and sort of I think you can see that in the breadth of their response. It's not China's not just putting in place tariff retaliation; they're also blocking or they're also limiting exports of certain critical minerals. They've announced investigations into U.S. companies, and so they're sort of putting on display all the different ways that they could harm or hurt the U.S. economy in an attempt to show that whatever the U.S. does, China has the means and also so far has the will to retaliate and to hurt America if the U.S. hurts China.
Yes, and of course, James, these are the two biggest economies. When they sneeze, the whole world will catch a cold. So might this ripple down, or how might this ripple down on the global economy and share markets around the world, which today, many of them were on the rebound?
I think for people that are selling into the Chinese economy, the damages from the U.S. tariffs are there's going to be a slower growth in China. There's also going to be slower growth in the U.S. And then obviously if the U.S. puts these tariffs on all the other countries around the world, exports to the U.S. will be affected by this. So there's on the immediate sort of first order effects, this will be damaging to trade. Countries like Australia, which do export a lot to China, will be affected by that fall off in demand. And the second order effects are when other countries then can't sell their products to the US. When Chinese exporters can't sell their products to the US, they're going to be looking for other places to sell those products. And so countries like Indonesia or Vietnam or which have already been seeing a big increase in imports from China, will suddenly be seeing a lot more imports from China, which is going to affect their domestic companies as well. You're already seeing Indonesian garment workers being laid off because clothes from China are much cheaper. You could see more and more of that happening as Chinese exporters try to look for new markets once the U.S. is closed to them.
Yeah, would that mean, in more broadly, a global economic downturn and also pointing to China's target of 5%, that looks like it's not likely to be met?
I mean, I think the Chinese will do everything in their power to meet that 5% target. They were struggling last year, and at the end of the year, they announced a bunch of stimulus and they pulled it out. So I think if the economy looks like it's slowing, we'll get GDP for the first quarter next week. But if the economy does look like it's slowing, I think you'll see more and more stimulus efforts being announced by the central bank, by the Ministry of Finance here. But yes, of course, if there is a global slowdown or a global recession, if there is a global trade war, that's going to affect everyone's growth. And I think the Chinese government has been making very clear that if these problems do arise and if there is problems with growth, the culprit for that is not the Chinese government themselves. The culprit for that is going to be Donald Trump and the American actions. So if there is a slowdown eventually, an inevitable slowdown in China, Xi Jinping is not going to be the one the Chinese people are blaming for that.
Yeah, and do you think what Xi Jinping would be doing would have an influence on other countries who were perhaps looking at, at bilaterally dealing with the Trump administration to persuade Donald Trump to lower or lift their tariffs?
I think many countries will look at how China acts or how China retaliates against the US, but no other country, I think, in the world, even maybe the European Union, they don't have the economic strength that China has. If you're Australia, if you're Vietnam, if you're Japan or South Korea, they're much more dependent on good trade relations with America, and also many countries are dependent on good security relations with America. So I think, while many people might like to be able to retaliate against these tariffs from the US, it's really only the European Union and China that has that luxury. So I think people will look at what China is doing, but I don't think anyone's going to be following in their footsteps very closely.
Yeah, and finally, James, I found it quite interesting that just a short time ago, a couple of hours ago, that the European Commission President Ursula von der Leyen, she spoke on the phone with China's Premier Li Qiang, saying that Europe and China had the, quote, responsibility to support reformed trading systems that is free and fair. So is this trade war, bringing these two parties together?
I think in the general sense of, they both support the WTO system. Yes, this may well bring them closer, but there is also a lot of trade differences or trade conflicts between the two of them as well. China is really more a competitor than a cooperator on the economic front, on the trade front with the European Union right now. Chinese EVs are flooding into the European market. Many Chinese companies or many European companies are seeing Chinese companies become more and more competitive. So while they may say on the surface, we want to cooperate against these U.S. actions, there are lots of people in the EU who are calling for higher tariffs on Chinese goods, because they see that the Chinese companies are a threat to them. So it's hard to see how that talk about cooperation can sort of go beyond that talk. Though maybe at the WTO they might be a little bit on the sidelines, but that has to be a real change in both Chinese economic policy and also European economic policy for that relationship to change radically.
Okay, James Mayger, thank you so much for giving us your insights there from Beijing. Thank you.